see synergies focus coming in from the Nirma Group. Amit Gupta, Senior VP and Fund Manager at ICICI Securities, is with us on the show. Amit, did you ever hold Glenmark Pharma or Glenmark Life in your portfolio? And would you now be interested in either of these stocks if you did post the deal?
No, actually, we are not holding any pharma name in the portfolio. Rather, we are focusing more on the chemicals because they have come down. And I think there possibly the opportunity is coming. We had seen that before because of the export lowering numbers. Those stocks had come down. But now you are seeing in China, some of the manufacturing units, they have trimmed down the production. And that is why some chemical prices, commodity chemicals or something, they have started moving higher. So that is where I think if you have to see the risk reward perspective, then I think it is better in the chemicals now.
All right. Hi, Amit. Good afternoon. Amit, the hotels, all of them have run up big time. And now maybe the best season is coming for them. You have the World Cup. You have a seasonally strong quarter as well. I mean, any of them still have that kind of room to move up from here? You're already seeing high ARRs, already high occupancies. Any of them are still looking good?
So I think we are very positive on Lemon Tree because if you see the average room rate, so it has grown by almost 9% year on year. And that is why when we look at the revenue per average room, it has grown by 17-18%. And I think going forward, they are saying that per annum 15-20% of tariff rate increase can be seen, and that can continue for 4 years. And that is why the hotels which are carrying some kind of debt, we can look at. Generally, we avoid the debt companies, but when you are increasing the tariff, that means the possibility of paying the debt also is higher, and that is where the alpha comes. And I think Lemon Tree, which was, near the supply area of 9,500 for a long time. So this supply area after the IPO, because after the IPO, we saw the stock moved up and then declined. So it was there only. And there actually, I think such kind of fundamental triggers are coming. And going ahead, you rightly said the wedding season is coming. The World Cup is there. The tourism centers are opening up in India from the Ayodhya temple. And I think that can lead to more boost. In fact, one more, key thing in Lemon Tree is the opening up of hotel near the Mumbai airport. So that also is awaited, and I think it is going to happen very soon. And this is where I think the luxury segments which are performing, premium hotels are performing, the number of unicorns which are 108, they are going to be 250 by 2027. So where this promoter money is going to be, it is going to be parked, I think, in some kind of tourism related space, which are definitely in premium. So Lemon Tree is one of the beneficiary of that.
Aurika, that's the Lemon Tree Hotel, which is coming up near the Mumbai airport. And according to the company, it's likely to be a crown jewel for Lemon Tree. Aurika, that's, the new property coming up near the Mumbai airport. Amit, is Maruti one of the stocks that you're interested in? Because even as the small car, the passenger vehicles, the entry-level segment may be hurting and there is stress, the company is increasingly gaining a lot of share in the UV market. In fact, we chatted with the management yesterday, Shashank Srivastava, and he said Maruti is on track to have a 25% market share in the UV segment by the end of FY24. So that's going great guns for them. And Maruti today is higher by 2.5%. I think Citi raised the target price further on Maruti. Do you like Maruti? And is it attractive at these levels of 10,500?
So I feel some run-up has already come in. So if you see, it had spent a lot of time near 8,000, and that was a level actually where it was supposed to be bought. Because I don't think that kind of superlative growth you are going to see in Maruti. Yes, it can give you returns, but not the kind of alpha that you are looking for. I think that is possible in those segments which are totally into SUVs or possibly the auto ancillary space now, which is coming out. I think that is where, our much fast pace of returns can be seen. So in our portfolio, we have Mahindra and Mahindra. We believe that 1800 kind of levels, the stock is immediately, moving up. It has already spent some time now. The focus on SUVs and the tractor segment also is growing because tractor is not only related to the farming land now. If you see in the Punjab and all, generally we have seen the corporates also, they have started, buying for inside internal city. So it is also linked with the capex story now. So this company actually is on a high growth phase. In fact, if you look at in the auto ancillary space, one of the stock which has come down because of little higher crude prices is Apollo Tires. I think very, very attractively valued stock among the tire companies. And when the situation arises little adverse, then the opportunity also comes in. And that is what we can look at in some of these companies, because we don't believe the crude prices are going to stay, fall long higher, because ultimately it is driven by the supply cut. It is not driven by the internal strength. And that is where eventually you will see that the crude prices may be cooling off after a while. And that is where the companies which have come down because of this and which are moving into a high growth scenario, one of them is Apollo Tire that we can definitely look at in this particular decline.
On Maruti, I'm just wondering, brokerage notes as well, or is the street sniffing something more on that one? Because that's showing some strength for the last couple of trading sessions. Amit, what about the PSU banks? People who didn't believe in it, they've actually missed out on one of the biggest rallies. They've cleaned up their books. There's been good credit offtake as well. And there was valuation comfort. But post this recent run, is there still some value? If yes, which PSU bank do you like the most?
So I think when the bond yields remain subdued, then PSU banks are one of the best bets. If you see from May 2022 onwards, despite the repo rate increase from 4% to 6.5%, the 10-year GSEC yield has remained below that level of 7.6%. In fact, it is 7.15. And we have seen the US bond yields have gone much higher, sharply higher. So when the bond yields are subdued, it is definitely the time to look at the PSU banks. And now you have seen that possibility of the inclusion after another, 1 year or so. So that is another one which can bring to, the move. Along with this, I think one fundamental reason is if you see the credit growth in the banks, it is around 15%. But if you see the corporate lending book, it is only growing by 6% because it is just picking up now. Because private capex remain very slow in India. It was more the government efforts on infra and the public capex was more, but that has driven to some kind of demand surge, and that is why the private companies also are moving in and having more capex. So once your corporate lending with grows, I think the PSU banks, they do much better, and this is the reason that whatever declines are coming in, we are seeing a faster move despite that the elections are coming in, and generally the risk is that the freebies and etc. these kind of things can be given actually by some of the parties. But despite this, if they are covering, I think it shows the internal strength.
We'll leave the conversation here for now. Amit, thank you very much for joining in. By the way, markets are moving to the day's low now. 19,664 was the intraday low on the Nifty, and we are virtually there. So this has been quite a reversal in the markets and quite a fall in the last 2 hours at the day's low. The Nifty Bank, as we highlighted, has also slipped into the red. The picture on the European market region is also fairly weak. The CAC is down 0.6%. The DAX is down close to about 0.3%. And all these indices are down anywhere between 2 to 4% for the entire week. So the